for more than $2 a share. Would that be good for Wall Street?
Our Fox panel back now to talk about it, including Biz Radio Network host Mike Norman, Scott Blyer from HydroidInvestors.com. Scott, I don't know. Let's talk about this market right now. I got to ask you, what are you seeing?
Well, I think the maximum stress in the financial system was this weekend with Bear Stearns' almost bankruptcy. And there's a lot of argument on both sides of the fence. I don't think this was a bailout. This was not a bailout. People are calling it a bailout, whether it's for counterparties. This was a sacrifice. Bear Stearns was a sacrifice to the subprime mess. Whether that's going to be good or bad down the road, it was a sacrifice, and those people are suffering. Listen, brokers who came to Bear Stearns, who got a big check for 5 years, they can walk away and go get a new job. The problem is the old-timers that have equity in that firm.
Also with us, Joran Brook and Peter Schiff. Peter Schiff, what do you think about Bear Stearns? I mean, as Scott says, it was a sacrifice of sorts. I don't think it's I thought it was a save.
Well, I thought they committed suicide years ago when they committed to these mortgages and these underwritings.
But they made tons of money.
Know that.
They made tons of money at the time.
All right, so then they murdered their shareholders and they pocketed money for themselves. Unfortunately, they own a lot of the stock in their own hands. But, you know, the government didn't want to shine a light on this. That's exactly right. They wanted to bury the problem under the rug. They don't want anyone to look at this collateral and see what it's actually worth. They wanted to sweep it under the rug. That's why they took all these liabilities on their own books.
But Peter, who's to say that it was worthless? Who's to say? I mean, and Nicole's point is she's saying, well, we would have found out if they would have just gone
Let's find
bankrupt.
out. You know, you got Steve Forbes on television the other day saying we should have a moratorium on marking assets to market. He wants to go back to the good old days before the crisis started, when Bear Stearns had all these assets on their books and pretended they were worth par.
Mike.
Michelle Galinas misses a huge point in all this. Bear Stearns was a primary dealer. It's one of a select group of institutions that deal directly with the Federal Reserve in making a market for Treasury securities. Now, for whatever reason, the Fed has deemed the primary dealer system of a public good, and it wants to maintain that. Bear Stearns was I can hear Joran laughing, as usual. Bear Stearns was a non-bank entity. It didn't have the ability to go to the discount window and get liquidity in a bad situation. It had to depend on the banks. And for whatever reason, the banks didn't want to fund Bear Stearns, probably because of their own issues. So the Fed saved Bear Stearns, and by the way, provided the discount window now to all.
They didn't save Bear Stearns.
Scott,
all
primary dealers now have the ability to go to the discount window.
I heard some snickering from Joran. I want to hear what you're thinking, sir.
I mean, what the Fed did is not save Bear Stearns. What the Fed did is give a sweetheart deal to J.P. Morgan, guaranteeing their downside, handed them a gift, and you can see J.P. Morgan's stock responding.
Absolutely.
They handed J.P. Morgan $2
it doesn't mean that shareholders are going to go for
subsidy.
It doesn't mean that shareholders are going to go for it. That was the question you asked.
But Nicole is absolutely right. What this market needs is information. What this market needs is visibility. What this market needs is for it to function. Let the market function.
Well,
Let some of this junk get cleared out.
Joran and
there's
Peter
pain
have
involved.
something here. Okay. This situation developing with Merrill Lynch and SCA, there are hidden skeletons all over the place that are starting to float up. If you look at SCA stock, I don't know if we can get an intraday chart of this company, SCA, this is another bond insurer. It had been up 8% this afternoon. Merrill announces it's suing to make sure they hold up obligations. Now it's unchanged, Scott Blyer. There could be 12 other situations like this, and if you try and throw all this money at the Bear Stearns JP Morgan situation, how do you know there aren't 12 more problems out there?
Listen, there is a lot of paper out there, and nobody knows what it's worth. It's because it's been sliced and diced. Let it all be marked at 50 cents, because that's what it's probably worth. Not everybody is going to walk away from their homes. This is first and foremost a Wall Street problem, and much less than a Main Street problem.
Here's the intraday of SCA, and if you don't know what's going on here, Merrill Lynch has just sued a division of this company, XL. It's a bond insurer, to make sure they hold up their obligations. Merrill's nervous. So you saw it up 8%. Come on, you're telling me.
Merrill now has access to the discount window. It didn't have it before. Before, there was a real liquidity issue here, Liz. Dick Fuld said it yesterday, CEO of Lehman Brothers. The liquidity issue has been taken off.
Everybody's yelling.
I'm going to get it from her, though. That's what they don't know.
Like maximum financial stress.
They have access to liquidity now where before they did not have access to liquidity.
Don't yell at me.
That's the problem, Mike.
Leave Liz alone.
When the Fed gives them access to liquidity, they're socializing these losses among
They're
all
not
us.
socializing
Yes,
because
it's
the Fed
whole-
is not
wait,
using
wait.
taxpayer money.
No,
the
they're-
Fed creates money.
Right.
You have no
Right.
understanding then of how the
Wait,
Fed works.
I don't know
I'm calling a timeout. I'm calling a timeout, guys. We're going to have to leave it right there. We're going to take a break. Leave Liz alone. Jeez, man. All right.
Only I'm allowed
Four
to
of you.
yell.
All right, we'll yell at you
Rough.
instead.
Yeah, really. Bring it on, buddy.